For the section 11-2 work together, we have 4 transactions that we need to journalize. 2 of them are for correcting an error from a previous journal entry, and then the other 2 are for granting credit to someone for a return. So starting with June 4th, we are going to grant credit to Keller Associates for merchandise returned. So Keller Associates owed us money and they returned some of the product that we sold to them. So we're going to decrease the amount of money that they owe us. So starting with sales returns and allowances, for the total of the product that we owe them, sales returns and allowances, it's credit memo 28. And we're going to debit $245. That's the price of the merchandise returned. We also need to debit sales tax payable for $14.70, which is the sales tax that they had originally owed us, but they no longer do since they made a return. And then finally, we have our accounts receivable / Keller Associates for the total, $259.70. So that is our transaction. The return, sales tax, add those together, and that's how much we want to decrease Keller Associates account by. Our next transaction on June 9th, we made an error and we caught it. So we need to journalize our transaction for the sale on account to Ashton and Lindsay. So we should have done that originally, but instead we made an error and we had debited Abram Corporation for $623. So now we need to update that. So we should have debited the first time that's spelled right, Ash. And this is memo 61. We should have the first time debited their account for $623. So we're doing that now. What we did do the first time was we debited Abram Corporation. So now to cancel out that debit, we need to credit Abram Corporation for $623. So the first line, that's what we should have done the first time. So now we're doing that in the correcting entry. The second line, we need to cancel out what we did originally, which was debit Abram Corporation. Our next transaction on the 12th, we granted credit to Lambert Schools for damaged merchandise. So we sold them damaged merchandise, they're returning it, and we need to credit their account for $206. So they are schools, so we don't charge them sales tax. So it is not as long of an entry as our first one on June 4th. Credit memorandum number 29 for $206. And then we want to credit the account for $206. So we have a credit memorandum. We need to credit the accounts receivable account, credit and credit. Our last transaction is another correcting entry on the 26th. The entry says that we found out that a sale on account to Keller Associates was incorrectly charged to Carson Properties. So what we should have done was debit Keller Associates, so we're going to do that now. Memo 62 for $598. And then we need to cancel out our error. So we should have debited Keller Associates, so we're doing that now. And then we have to cancel out the debit to Carson Properties with a credit. And that is the 4 journal entries for section 11.